Welcome back, beautiful tri-state area. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Welcome back to the Founders feature. Wealth isn't just about numbers. It's about strategy, foresight, and the ability to pivot before the rest of the world catches up. As markets fluctuate and traditional financial models struggle to keep pace, a new wave of industry leaders is rewriting the rules of wealth management. Enter Autry Pruitt and Hunter Spencer Gaylor, the driving force behind Spencer Pruitt, a firm that isn't just managing wealth, it's redefining how financial success is built in an era of disruption. Autry is co-founder and CEO of the firm. He is a strategist at heart, blending decades of financial expertise with political and economic insight to navigate an ever-changing landscape. A powerful conservative voice, he served as a surrogate for the Trump campaign, founded New Journey PAC, and grew an online platform to 1.3 million daily users. His influence extends beyond finance into real estate, regulatory arbitration, and media, making him a force in both economic and political spheres. Hunter, co-founder and president of the firm, brings a global markets perspective, having played a key role in raising over $1 billion in capital for clients and advising some of the most influential names in finance. With experience spanning Wall Street and international investments, he's helping position Spencer Pruitt at the forefront of financial innovation. Together, they're making waves, breaking away from traditional models and positioning Spencer Pruitt as a powerhouse in wealth strategy. Today, we're going to dive into their vision, the risks they've taken, and what they see coming. Chatting how this dynamic duo is disrupting finance and changing the game. Welcome to the show, superstars.
Thank you so much for having us on board.
Nice to be here. Thank you.
So excited to have you. Okay, let's dive right in. So, Autry, financial markets have been anything but stable. Inflation, policy shifts, and global disruptions have investors really on edge. Yet, Spencer Pruitt continues to thrive. What's your strategy for navigating this turbulence?
We look at the bottom line fundamentals. We look at balance sheets. We look at the performance of company and competence of the chief executives leading those companies. That's the strategy. So when the markets are going crazy and things, do you have a CEO that is laser pointed, laser focused, and has a plan and delivers on that plan? Do they understand a balance sheet? Do they understand their cash flow? Do they understand a profit and loss? Basic accounting 101. If they have those in point or on point, then it's a go. That's why we're able to remain stable while everybody else is rocky.
Yeah, that's a powerful approach. When you look at the reports from McKinsey, they find that firms embracing adaptive financial strategies, like you just mentioned, they outperform static competitors by nearly 30%. And what you're describing is basically a masterclass in adaptability, because you need that CEO to be at the forefront of all of these ever-changing market trends and curves. Which brings me to my next point. Hunter, wealth management is often seen as a game for the ultra rich, but studies show that 70% of high net worth individuals started with little to no generational wealth. What misconceptions about wealth building do you think hold people back the most?
The biggest misconception is that wealth management is a privilege rather than a discipline. And I think too many people believe you need a certain net worth before you start properly managing money strategically. When in reality, I believe that financial stewardship should begin with the very first dollar earned. And that's where true wealth is built through intentionality, right? And that's allocating capital efficiently, understanding the risk in the markets and what's going on geopolitically, and then prioritizing what I would consider long-term wealth creation over short-term gratification. So ultra wealthy don't really succeed because they have access to exclusive investments or opportunities. They succeed because they treat every single financial decision as part of a broader, more global strategic framework. And so the earlier individuals adopt that mindset, the more powerful the compounding effects become over time.
Exactly. Wow. And the myth that you need millions to start investing is one of the biggest barriers to financial success. I mean, the reality is that consistent strategic moves, like you just described, no matter how small, compound over time, the end, right? Now, Autry, you built influence not just in finance, but also in political advocacy, media, and digital platforms. You even grew an online platform to 1.3 million daily users, to my understanding. How has that cross-industry experience shaped your approach to wealth management?
Messaging, communication. One thing about building a platform is you have to understand how to communicate, how to message, and how to do it in a concise, succinct way so that the audience can grasp what you're saying. And you have to do it in such a way that they grasp it. A lot of people communicate on how they want to hear it versus how the audience receives it. Same thing applies when you're dealing with high-level business consulting. You need to communicate in the way your client understands the communication, be that verbally, be that graphs, be that reports. So a lot of times the reports or term sheets or items, any items you put out, oftentimes we have to tweak those because we understand that our clients don't look at them every single day, right? They're not looking at balance sheets every single day. They're not looking at financial reports hour in and hour out. So a lot of times, rather than get caught up in fancy language and jargon, we use plain language that's clear, that's understandable, so we can communicate effectively. So that's the real lesson in from politics and media into the financial Wall Street space, is understanding how you communicate. I always tell people, if you get somebody from Wall Street that's saying a bunch of words and a bunch of acronyms you don't know, you should run for the hills.
You're so right. And the ability to blend that financial expertise with the digital reach is becoming a massive advantage. Harvard Business Review study found that firms leveraging digital influence see 25% faster client acquisition. And clearly, Spencer Pruitt is ahead of the curve once again. Now, Hunter, if you had to bet on one major financial trend shaping the next 5 years, what would it be?
Well, straightly put, I mean, I place my bet on the intersection of private credit and AI driven financial infrastructure. I mean, it's all AI. We're witnessing a structural shift in capital markets where you're seeing traditional banking constraints, whether it's due to what we're witnessing now, which is regulatory burdens. You're seeing balance sheet risk aversion, which Autry alluded to. We look at balance sheets, and then and opening opportunities for alternative lending to step in. So at the same time, AI is revolutionizing how capital is deployed from a real-time risk assessment. You have to look at hyper-personalized asset allocation. So these two forces together with personal credit and AI, you're going to see capital is no longer dictated by what these big institutions are doing, but it's going to be sophisticated data-driven models, and investors who understand this. This is the convergence. This will be well positioned for future growth for the next 3 to 5 years.
That's huge. And alternative assets, right? From blockchain backed investments to private equity and emerging markets are exploding.
It's
The
all
black
decentralized, all decentralized financial ecosystems.
Yep. Yeah. And to your point, there was a study just last year, BlackRock report showed that institutional investment in alternative assets has grown by 42% in the last 3 years, which lines up exactly with what we're seeing. Now, Autry, risk and reward go hand in hand. Some of the biggest financial wins come from calculated risks. Can you
Yeah.
share can you share a bold move that Spencer Pruitt has made that paid off in a big way?
Yeah, one of the bold moves we've made is we've taken on high risk clients that have had problems in the past. So we have many clients that in their past life may have ran into a problem with the Treasury Department or with the IRS. And where big firms such as JP Morgan Chase or Goldman Sachs or McKinsey of the world would run for them and not make them clients, we make them clients. A lot of times these individuals got into trouble not because they were trying to avoid the law, but they got into trouble simply because they were growing so fast. They had no regulatory experience and they ran afoul of some law, and they ended up in years of litigation. And then once they rebuild their wealth, so they lost their wealth, they rebuild their wealth, then all of a sudden they're locked out of the mainstream financial systems. So one of the things we've been able to do is partner with them using our contacts and our resources throughout the government to bring them mainstream again. The big firms won't touch them, we will. And so that's a big, bold risk that we take, and it's paid off in droves for our clients and for our own firm.
Yeah, that's right. That's the kind of strategic boldness that separates firms that drive from those that merely survive. And again, we go back to our stats. Bain and Company, they did a study and they found that the most successful financial firms make at least 10% of their annual portfolio bets on high risk, high reward opportunities. And clearly, you understand that game well. Now, Hunter, you've raised over $1 billion in capital, which is an incredible feat. When you're dealing with high stakes investments and major financial players, what's the biggest lesson you've learned?
let me be very clear in this. I think the greatest lesson that is that capital is always abundant, but conviction is rare. Okay, money flows confidence, and confidence is built on clarity. Autry said it earlier, it's about messaging. So whether it's a venture deal, private equity transaction, doesn't matter what it is. When you have the ability to articulate a vision, a clear vision, and we see it in politics. When Trump was running, he made a very clear vision. I want to make America great again. I want to make America safe again. I want to make America healthy again. You
Yeah.
have to be decisive, and they fund people. Investors don't fund ideas. They fund people who can turn ideas into reality. Same thing with the vote. They vote for people based on messaging. And you have to be decisive, intellectually rigorous, and you have to be disciplined in your allocation strategy. The best deals are not the ones that look the safest on paper. Let me be very clear. They're the ones where the underlying fundamentals are sound, but the market hasn't fully priced the upside. So when you raise money, it's all about the messaging and the articulation and the confidence standing behind the articulation and the message.
That's gold. The idea that trust and long-term relationships drive financial success isn't talked about enough. So thank you for saying that. When you look at institutional investors, they prioritize relationships over short-term gains, which proves your point exactly. Now let's chat leadership, right? Autry,
Yes.
leadership isn't just about making financial calls. It's about building a culture that can execute the vision. Now, you've balanced leadership across finance, political advocacy, and arbitration. What's your philosophy on leading high performing teams?
Oh, well, I'll make it brief. I have a long a long philosophy about it, but I'll make it brief. Hunter alluded to some of it. The first thing is understanding the vision yourself. A lot of times leaders can't lead because they do not know their own vision. If you can't lead yourself, you sure can't get anybody else to follow you. So, step one is understanding your own vision. The second is to be disciplined enough to stay to your vision. The biggest thing I see CEOs get in trouble with, or founders, is they have a vision, they have a product, and then another idea comes along and they jump over there. Another idea comes along, they jump over that way, right? Staying disciplined in your vision. And then third, this is sort of contrary to the second, is being nimble enough to know when you're off track and you can pivot. It doesn't mean your vision changes. It means the process and execution to how you're going to complete your vision to get to that goal changes. And those are the three areas of leadership in terms of high performing teams, right? Because usually your high performing teams have individuals who are highly intellectual. They're engineers. They're staying narrow. They're staying focused, right? They're going to row that ship. You just have to determine where the ship is being rowed, right? So if you can stay focused and be nimble enough to move, they'll move with you. It's when you become scatterbrained, they become scatterbrained.
Yeah, that's the winning mindset. That's the winning mindset. Companies with highly engaged leadership teams are more profitable. The end, right? And the way you empower people clearly reflects that success. Hunter, at the end of the day, financial success is about long term impact. What legacy do you want to build with Spencer Pruitt?
I always think about this um, because this is a very important question. It's not just about what we do from a capital deployment perspective or investments or consulting or advisement, but it's really our institutional philosophy of wealth creation that will transcend generations. Okay. Our goal is to build not just an organization, but a family company, if you will, that can
Yeah.
actively shape industries and catalyze innovation. Legacy, and this is very important, legacy is not about size, it's about impact. I want to be very clear about that. If decades from now we've only compounded returns, but we haven't empowered entrepreneurs or reshaped industries or set new standards of excellence, which is what we believe in our company is operational excellence. It's excellence in every aspect of what we do. Then we're not building the legacy that we believe is an excellent legacy. So our industry doesn't need more firms. What it needs is more vision, and that's the legacy that at least I intend to build. And I think along with my partner Autry, we intend to build.
Boom. That's what it's all about. Not just making money, but creating something that lasts. The firms that focus on legacy, not just transactions, are really the ones that stand the test of time. Well, we are officially out of time. On that note, thank you so much for joining us. You guys are so fun to chat. I could do this for another 30 minutes. You guys are amazing.
Let's go.
Thank you so much. Thank you.
To connect with Autry, you can go directly to his Instagram handle at Autry Pruitt, or you can check him out on LinkedIn at Autry J Pruitt. And to reach Hunter Spencer, you can follow him on the gram at Hunter's Gaylor, or again on LinkedIn at Hunter Spencer Gaylor. And of course, for more on Spencer Pruitt, visit spencerpruitt.com. That was WR's Founder Feature of the Month. Until next time, stay sharp, stay strategic, and never settle for the status quo. We'll be right back after this. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio.